How is everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, we're going to be taking a look at a blog post from PCBB, which looks at digital onboarding. And I asked the question, does your bank even do digital onboarding? But if you do, how long does that usually take? Like, how long does that process take? And are your customers happy with it? So we're going to look at a very interesting blog post here. So this is titled, How Many Minutes Does Your Digital Onboarding Take? So digital-only banks are landing more than 4 of every 10 new checking account openings. To better compete, banks can strengthen their online and mobile banking account opening tools. So if anybody wants to take a look at this blog post, there is a link to it in the description down below. But let's get into this a little bit. People's attention spans are getting shorter. We've all heard that. But what's usually missing is that remark is the context of just how much our attention spans have been trimmed down and how quickly the change has happened. In 2004, the American Psychology Association clocked the average attention span on any screen to be around 2.5 minutes. In 2012, the time dwindled down to 75 seconds. As of 2023, our attention span has plummeted to around 47 seconds on average. And if you're still watching this video, that's amazing because most of you tune out after about 5 seconds. All right. Just joking. Ironically, a person can't expect to get much done in 47 seconds, but that's what your brand has to work with to engage a potential customer. When a customer is completing a big task like onboarding and opening an online account, it's a pretty unrealistic metric to try to achieve that in the same 47 seconds. However, the closer you can get, the fewer prospective clients will abandon the process in search of an institution with a smoother process. So online or mobile checking account opening continues to grow, but community financial institutions are being left behind. According to the 2025 Cornerstone Advisors Digital Banking Performance Metrics, looking at data from the past 5 years, digital banks and fintechs now account for most new checking account openings, followed by large and regional banks. Not much is left for community financial institutions. Although neobanks and digital banks are relatively new development, they quickly emerged as leaders in opening new checking accounts. By 2020, they gained more than 1/3 of all new checking accounts opened, rising to 47% in 2023 before slipping back to 44% in 2024. So banks, meanwhile, community banks, meanwhile, settled in at about 5% of new account openings and haven't budged much in the last 4 years. Credit unions ranged from a high of 10% in 2022 to a low of 5% in 2024. Mega banks have slipped somewhat from 24% in 2020 to 20% in 2022, while regionals have bounced around the low of 20%, settling in at 23% in 2024. So here is a chart here. Let me see if I could blow this up just a little bit to make this a little bit easier to see. Here we go. That's a little bit better. So this is from the Cornerstone Advisors. What was it called? Their digital banking performance metrics report that they put out. And this was a chart in here. So this is percentage of new checking accounts opened by type of institution. And we can see here the black is 2020. The blue is 2021, gray is 2022, kind of dark green is 23, and then light green is 24. And so you can see mega banks over here, basically banks greater than 1 trillion assets, which would be the big four biggest banks in the country. And like I said, have gone from a range of 24% in 2020 down to 20% in 2024. Regional banks, 100 billion to 1 trillion in assets. They've gone from 27% in 2020 down to 23% in 2024. So it is interesting to note that the mega banks and the regional banks all have dropped by around 3-4% in the last 4 years. That's interesting. Community banks, again, have just held steady, 5-6%. 5, 6, 4. They've kind of held in that range. And then community banks, they consider basically any bank under 100 billion in assets. Credit unions, again, have kind of jumped around between 7%, as high as 10, and then back down to 5 in 2024. And then digital banks, fintechs, 37% in 2020, got as high as 47% in 23, and then dropped a little bit to 44% in 24. So there's no doubt that, Chime, Block, PayPal, there's no doubt that Yodel. Obviously, we saw what happened with Yodel, but I mean, there's no doubt that they're taking in a lot of these accounts, and they're having a lot of success with it. And their websites, their onboarding process through the website is I think probably far superior than to what a lot of community banks are doing out there. I'm going to shrink this down a little bit here. Bring this back up. So, but like I said, I'm a hold of thought here, but let's continue on here with this. So a big part of the problem for banks may be the nimbleness of the digital account opening processes at digital-only financial services companies. Exactly what I was saying. For example, online banks like Chime and SoFi say that their new account application process takes less than 3 minutes. That's a tough standard for a CFI to match. Like that. That's 3 minutes that's incredible. Online account opening strategies for banks. So community banks that want to increase their pool of checking accounts, particularly with digital savvy younger generations, should probably look to enhance their digital account opening processes. Much of the growth in checking accounts has come from fintechs and online banks, which are adept at the online account opening process. The problem is that many banks' online account opening processes have too much friction. The lengthy, detailed application process wears down applicants and prompts them to abandon the task. According to one analysis, half of all applicants call it quits before completing the online application process. Marketing that stresses a financial institution's online account opening options won't be successful if the actual process turns potential customers away. So here are some ways that banks, community banks, can improve and enhance their digital account opening processes. Number one, prioritize speed. Number two, investigate where your friction points are in your digital opening process. Number three, use instant digital verification. Number four, avoid detours. Number five, streamline instructions. Number six, conduct tests with real people. And number seven, have a strong mobile design. So in other words, prioritize speed. Work toward an online application process that takes no more than 10 minutes. Since applicants tend to get frustrated and abandon the process after 10 minutes, a bank with an onboarding process that takes less time than that will be truly competitive. Investigate where your friction points are in your digital opening process. If you can identify points at which applicants most often give up, you can focus your attention on improving those moments in the process. You can also research general comments about digital account opening on sites like Reddit, or by using a social listening tool that crawls social media and reviews sites for mentions of your brand. Number three, use instant digital verification. So instant verification is one of the tools that enables digital banks to accept applications so quickly. Using methods like digital ID scans can enable identity verification in seconds. 4, avoid detours. The account opening process should be digitally self-contained so that an applicant doesn't have to keep leaving to find some document or deal with multiple redirects to external applications to complete the application itself. Number 5, streamline instructions. Users shouldn't have to wade through long, involved instructions on how to apply, review, and edit your instructions with an aim of having short and simple wording for every step. Number 6, conduct tests with real people. So user testing can quickly reveal problem areas in an online account opening process. From there, you can revisit pain point testers noted and retest once you've addressed them. And then number 7, having a strong mobile design. So many applicants now use their mobile devices to apply. Make sure your mobile application process is effective, efficient, and user-friendly. So once the application has been completed and filled, the crucial final step, approval or denial, should be quick and definitive. However, it shouldn't cast aside risk management protocols. Devious individuals trying to open fraudulent accounts love the speed and simplicity of online account opening. An effective online account opening process should be both fast and safe for the sake of both the applicant and the bank. Speedy online account opening has helped power the rise of digital-only banks to effectively compete for new accounts. Banks need equally speedy and straightforward digital account opening processes that work equally well across many digital devices. So that all sounds absolutely fantastic. Here, now let me give you, here's the problem with all of this, okay? So let's go back up here, and I want to look at, let's take Chime for a minute. Chime is not a bank. Chime, does not offer FDIC. They're not FDIC insured. They don't offer FDIC insurance. They do not have all of the regulation that a bank has to comply with. They don't have to comply with CIP and KYC and EDD and all these other things that a bank has to do. That's a big part of the reason why when a bank goes to open an online account, there's friction points and there's all these things in there, because you have to comply with all of this fraud. And what does it say here at the very end? It says, it shouldn't cast aside risk management protocols. Yeah, obviously. Devious individuals trying to open fraudulent accounts love the speed and simplicity of online account opening. Duh. Like, of course, yeah, you bet they do. And I have heard a number of banks that basically tried to do online account opening, and it was a disaster, because not that people weren't coming in to use it, not that they weren't opening accounts, but 90% of the accounts that they were opening were fraud. They were fraudulent accounts, and they had people there, and it talks to the final step there: approval or denial should be quick and definitive. Well, if you're sitting there all day long, say you open, you come in, it's a Tuesday morning, you check, okay, did anybody open any accounts last night? Oh yeah, we got 100 new accounts. Oh, this is fantastic. Well, let's go through and see if we could get these approved or denied as quickly as possible. When you start going through it, it's like denied, fraud. Okay, one approval. Fraud. One approval. Fraud. Like you begin to see how people are spending a lot of time, and so you start to ask yourself, is the juice worth the squeeze? The other thing with a company like Chime is that they don't have branches, so they're not paying for real estate and all the expenses that go along with real estate. They're not paying for all the staff to do that. There's a lot. Community banks and regional banks, mega bank, they have a lot more cost there than does a company like Chime. So Chime can afford to put all their money into making a very attractive interface that's easy to use and very streamlined. They don't have to comply with all the regulations. So again, they can get rid of a lot of the friction points. But I do agree with some of the stuff in here. Like, I think community banks could do a much better job of having a stronger mobile design, having better streamlined instructions, avoid the detours. The instant digital verification, again, that gets a little sketchy with regulation and things that the bank has to comply with. And then you're hoping the people on the other end have the technology that you need too, right? It's not necessarily a one-way street. So again, now here's the curious thing, and here's what I would say. SoFi. How is SoFi dealing with this? Because SoFi actually is a bank now. They bought a bank. They became a bank. They have a bank charter. They're under all the same regulation that a regular bank is. So I'm just very curious how SoFi is dealing with all this. Maybe if somebody has the answer to that, or somebody from SoFi is listening, they could comment in on this episode, because I'd love to hear their take on it. Going from an online bank to an actual bank, how has that process changed? How have they had to change anything in that online onboarding process? And then also, as Chime and all these other guys, they're all applying for bank charters right now, right? Like, they're all trying to get in on the action. They're all trying to become banks, to get different charters. And once they do that, and all of a sudden their regulation goes through the roof, and they got it, that now it becomes a little bit more of an even playing field, right? How is that going to affect their onboarding process? Is their onboarding process now going to go from this great streamlined 3-minute thing to a far more clunky, 10-minute plus process, because now they've got to comply with all the stuff that banks have to comply with? So again, I love this. I think that there are a lot of things in here that banks should be absolutely paying attention to, and should be working on and trying to see if they could figure this out. I just wanted to point out that it is not anywhere near as simple as people may think it is. The fraud is just such a massive issue in this whole thing. Money's a big thing. Getting the right vendors, building the right system, paying attention to all the ins and outs, like that all stuff is all critical too. And that takes a lot of time and effort to make that a reality. But like I said, it'll be interesting to see, when we go back to this chart here, as a lot of these digital banks, as they get some type of bank charter here in the next, 5-10 years, it'll be interesting to see if this, if this playing field kind of evens out a little bit. I mean, I don't know. We'll have to see if, but it's something to keep an eye on. But again, I thought this was a really interesting blog post, and it gets back again to the question, like, if your bank is doing digital onboarding, how well are they doing with it? How long does it take? Are they being able to compete with companies like Chime and SoFi? What are their thoughts on it? Do they think that I was correct in my assessment on a lot of these pitfalls and hurdles in order to go through this process? So again, just a lot to think about there with that. But with that being said, I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I would love to hear from you on this topic. And as always, make sure to check out some of the other content on the channel. I hope everyone has a great day out there. Thanks for listening, and I will see you again real soon.